Hey everyone, welcome back to Corporate Decoder, where we put those big corporate filings under the microscope to see what juicy or not so juicy details we can unearth. Today, we're re-diving into an 8K filing from MSP Recovery, Incorporated, and let me tell you, it looks like they're retweaking some important financial arrangements. Alright, let us get straight into what this filing is all about. This is an 8K report, which is basically a way for companies to announce major events that shareholders should know about, kind of like a public bulletin board for important news. The big news here, folks, dropped on the 29th of September 2025. This filing tells us about a change to a deal MSP Recovery Incorporated has with a company called Yorkville. MSP Recovery Incorporated, or MSP. Recovery Incorporated as it is known by its trading symbol MSPR, and sometimes MSPRW and MSPRZ, for its warrants is involved in something related to healthcare claims and recoveries. They're incorporated in Delaware and based in Miami, Florida. Now, for the core of the story in this filing, it is about a deal that impacts their financing, specifically how they can raise money using something called a stock purchase agreement, or SEPA, with Yorkville. This is the key takeaway. They've agreed to lower what is called the floor price in their Yorkville agreement. Think of this floor price as a minimum price below which the company cannot sell its shares to Yorkville under this specific agreement. What they've done is dialed this minimum price down from $1.60 to $1.20. Now, why is this important? On the surface, it might sound like bad news for the company, right? Like they are willing to sell their stock for less. But let us decode what this really means. A lower floor price in a financing agreement like this can signal a few things. It might mean the company's stock price has been struggling to stay above the previous higher floor, and by lowering it, they're retrying to make the agreement more workable and ensure they can access capital even if the market price is lower. It can also give them more flexibility. For investors, it might mean that if the stock price is below $1.6 but above $1.2, they can still potentially sell shares to Yorkville. If it is below $1.2, they would have had difficulty doing so with the old agreement. This agreement itself isn't new. It was originally filed back in November of 2023. What is happening now is an amendment or a modification to that existing arrangement. It is common for companies to adjust these types of agreements as market conditions or their own financial situation evolves. Looking at the securities registered here, we see class of common stock and various redeemable warrants. The warrants have different exercise prices attached, like $50,312.5 per S-hair and also $0.4375 per S-hair. These are essentially options for investors. Remember, warrants give the holder the right, but not the obligation, to buy shares of stock at a specific price called the exercise price before a certain expiration date. The fact that there are warrants with such different exercise prices suggests different tranches or types of financing or investor agreements were in place. And importantly, MSP Recovery Incorporated is identifying itself as an emerging growth company. This means they qualify for certain provisions under US securities laws that allow for scaled disclosure requirements and extended transition periods for adopting new accounting standards. This can sometimes mean their financial reporting might not be as immediately comparable to more established companies. This section, Item 1.01, Entry into a Material Definitive Agreement, is where they officially announce this change to their deal with Yorkville. It is pretty straightforward. They entered into a Material Definitive Agreement, meaning a significant contract that impacts their business. And the actual details of this change are contained in a letter agreement dated the very same day, the 29th of September 2025. This exhibit would contain the nitty-gritty of how the terms of the Yorkville SEPA were modified. Finally, looking at the signatures, we see Alexandra Plasencia signing off as General Counsel. This indicates the legal team has reviewed and approved this change to their financial agreement. So, what is the big picture here for MSP Recovery Incorporated? They are actively managing their financing arrangements, specifically with Yorkville. The reduction in the floor price suggests an effort to maintain access to capital by making their stock purchase agreement more flexible in current or anticipated market conditions. While a lower floor price might initially seem like a concession, from a strategic standpoint, it could be a necessary step to ensure they can continue to fund their operations and growth initiatives, especially given their status as an emerging growth company. This move by MSP Recovery Incorporated highlights the constant dance companies do to manage their cash flow and financing. It is not always about soaring stock prices. Sometimes it is about having a workable plan to get the funds you need, even when the markets are tough. The company is prioritizing access to capital, which is crucial for any business, particularly for an emerging growth company looking to scale. Whether this specific adjustment proves to be a masterstroke or a sign of deeper challenges will depend on the company's future performance and how effectively they can leverage these funds. Alright, that is our breakdown of MSP Recovery Incorporated's latest filing. What is your take on this adjustment to their financing agreement? Do you see it as a smart move or a sign of trouble? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate documents. Don't forget to check out the Discord community linked in the description for more discussions and insights. Thanks for watching, and we'll see you next time on Corporate Decoder.